let's recognize one of our challenges in beating this ordinance is that the city was very strategic in reducing the transfer tax for the first million. So
But
presently
by a
is
small percentage, like a very small percentage, just to say that they did it, right?
to
Like it's
point
nowhere
six.
near as much as the doubling that's going to happen on the bigger.
Exactly. It goes from 0.5 to 0.6. And that's 95% of the transactions in the city. But here's what I wish want people to understand that obviously that was done for political purposes. There are very few people that have made a big statement that 0.75 is too high of a transfer for a buyer to pay. This is political, that the city can tell voters, hey, for 95% of the transaction, your tax is going down. But let's look at this issue of tax. First of all, that maneuver is going to deprive the city operating of projected $30 million a year. You guys like the game of shuffleboard? You know the game of shuffleboard, right?
Yep.
You take your first disc and you fling it and you land in 10 off, right? 10
I'm
off.
with you.
Well, the city, $1 million hole. And that's operating money. The city has to make up that $30 million that they're losing for operation. How are they going to make that up? It's going to be a tax increase on our regular property taxes. Because anything made in addition, is not going to general operations. It's going to a special fund earmarked towards homelessness programs. So here's the scary aspect of this. This is a kick in the ass to multifamily owners. If you're, a 20 unit owner or 40 unit owner, an owner of a 3-flat, that's over 1.5 mil. It's a kick in the ass. It's not fun when you purchase a property and $60,000 of money that you have saved up that you're ready to put in security or pest control or windows, or don't have that anymore. You have to pay that in the tax. But it's earlier. Same thing. It's a stab in the freaking heart to downtown, which is already struggling in unparalleled ways with vacancy rates for offices in the high to mid 20s, retail downtown in the 30% range. Downtown has never suffered more. So, the city might say, or the progressives might try to convince the voters, hey, these are rich hedge funds and REITs and don't worry about them. That is really a ridiculous argument, because if we want to tackle homelessness, we need to maximize employment. The kind of tax that has to be paid on a $60 to $80 million downtown high rise, the impact on union jobs, non-union jobs. I'm talking everything from the security man to the mechanical engineer to the you name it, let alone the restaurants and the bars that feed off downtown. Downtown, I think, provides about a third, or has provided a third of the city's revenue. There's been only one transaction that I'm aware of downtown in 2023. That was a property that perhaps sold 5-6 years ago for 100+ million. The sale price went somewhere between 40 to 60%. The impact on the revenue generated by the city is substantial. So when downtown is producing the revenue, the tax revenue, what's going to happen? There's still a levy. Our friends at the assessor's office, at the treasurer's office, or the taxing authorities have already established we need to raise X number of dollars. That's the levy. That money has to be raised. So if downtown isn't paying it, guess who is going to pay it, guys?
Yep. The rest of
It's going to be everybody else, including homeowners. So we have to brace ourselves. Forget the transfer. This is all separate from the transfer. Brace ourselves for substantial property tax increases, similar to what our folks in the Northwest suburbs are now facing. Brace ourselves, because the impact of the death, and not the death, it's not dead yet. It won't die entirely. It has to be repurposed. But the impact of the struggle that downtown is facing is a tax burden. Now, is there any worse time to add a transfer tax on top of that?